welcome everyone. We are excited for our second panel of the day. We're going strong. We've got quite a few people watching, quite a few people tweeting. I see your numbers have crossed 1,300 as of now, so that's always great to see. Second panel of the day and we're going strong. This is going to be a fun one. We're going to be getting into ecosystem funding in all things DeFi for ecosystem funding. I'm excited to introduce Nico, our moderator for this session, and our other panelists. So we have James, who is our head of impact at Octant, Vinay, who is our funding coordination lead at the Ethereum Foundation, and Lea, who is the funding lead at Argot Collective, and Francesco, who is the founder of Superfluid. Fran, sorry if I don't know if that was Francesco or Francesco, but...
Why Fran is easier.
Sweet. Well, I'll remove myself, folks. Excited for this conversation. Go for it.
Cool. Thank you, Michelle, for the intro. Excited to be here moderating this amazing panel on DeFi for ecosystem funding. We have some amazing panelists here, so I would love for you all to start with a quick round of intros. Fran, would you like to start?
Sure, yeah. So I'm Fran. I'm one of the founders of Superfluid. We're a protocol for money streaming that has been around since 2020. And we've seen in our 6 years a bunch of different experiments in ecosystem funding. We've been a part of a lot of those. We're collaborating with a lot of different kind of foundations and DAOs on their own ecosystem funding. And we're also collaborating with Octant on this. And in general, we believe that streaming is a solution to a lot of some of the problems that have shown up a bunch of times. So yeah, excited to be on this panel.
Thank you, Fran. James, would you like to go next?
Yeah, appreciate it, Nico. Excited to be here. As I said before, I'm James. I'm the head of impact at Octant. Been with the project now since I think early 2022. It was before focusing on the community side of things, but now I've recently shifted towards the more business development partnership side of things. So I've been working, talking to a lot of different DAOs, talking to a lot of different protocols to understand, how to bring sustainability to their growth initiatives. And I know we're going to talk about this a little bit later. Historically, what I've seen from a lot of funding, from a lot of different programs is that there is this lack of sustainability. A lot of token emissions are generally what fuels growth, and there's a lot of problems inherent in that. And so, yeah, excited to talk about that, how streaming and other mechanisms, DeFi as a whole can really be a solution, so that anybody building on top of Ethereum has a competitive advantage for the foreseeable future.
Yeah, excited to chat with you all. I think we're in a very pivotal point, so it's going to be an exciting chat. Lea, you're next.
Hi, thanks so much for having me. I'm Lea. I am responsible for fundraising at the Argot Collective. And for those who don't know, the Argot Collective is a group of people that develops and maintains critical infrastructure for Ethereum applications. It comprises of 6 teams that collectively spun out of the EF. And the one project that probably all of you know is Solidity, which is the primary programming language of Ethereum. It underpins more than 250 billion of US dollars in DeFi. So it's really a cornerstone of our DeFi ecosystem. And the goal of each project that is part of Argo is to make dApp development simpler, safer, and more rigorous. And I think from the funding perspective, I'm excited to discuss this in this round, is all teams have been part of the Ethereum Foundation before. So thinking about funding was not necessarily the prime topic for us. And we are now in a situation where we're independent and we are new. So while the projects themselves are not, but it's just one more collective looking for sustainable funding. And yeah, I'm excited to share some insights what we have been exploring there.
Yeah, looking forward to hearing those. Thank you, Lea. And last but not least, Vinay.
Thank you for having me. So Vinay Vasanji, Funding Coordination Lead at the EF. We focus on making it quicker and simpler for impactful projects to secure funding from across the ecosystem. And the way that we do that is we support existing EF grantees in securing additional co-funding. We work with initiatives that are originated from the EF, like Noir Acceleration and Proximity Prize and others, to fund and co-fund those initiatives. We're really interested in making it easier for builders to know where funding is available and just reduce the information asymmetry around sources of funding and how to go about securing it. And then the fourth one, which I'm personally very, very excited about, and I'm very happy to be on the panel for this, is we think there's a way to increase the overall pool of funding available to impactful projects through creative mechanism design. And I think that's something that now, with DeFi maturing, a lot of real world assets coming in, a lot of different opportunities for yield to be generated on chain, we are particularly interested in trying to configure and design and help teams identify sources of yield that they can use to sustainably fund themselves.
Awesome. Thank you all for the intros. Now let's get to the sauce. I think we're in a really pivotal point in terms of ecosystem funding, let's say, extend it even to public goods funding and so on. Well, Ethereum has always been leading, I would say, in this area. I would say since the beginning of Ethereum, we had, I think, the Ethereum Community Fund. I think it started things that funded Gitcoin, and then Gitcoin funded a bunch of stuff. And then we had a bunch of experiments with L2s, for example, Optimism, who had RetroPGF, and a bunch of other initiatives. So we've seen a lot of those experiments succeed, and some of them fail as well, but with a lot of learnings. And I think now there's a lot of regrouping, not only on the side of the EF, that's the most visual, but a lot of other parties that are trying to build towards a more sustainable way to fund ecosystems. And DeFi plays, I believe, a very important role there. So before we get deeper into it, I would love to have each of your takes on what's been the past and what we're looking forward now. You know, what in your eyes were some successful and some learnings from the past moving forward. And we'll go with the same order that we started with. So Fran, please.
Yeah, so I mean, you mentioned RPGF, right? We actually collaborated with Optimism. Most of the RPGF funds were distributed through Superfluid over the past 2.5 years. And we are big fans of the model. I am, however, not a big fan of the funding source, because I don't think it's sustainable to give away your treasury like that. It's unfortunately reflected in the price of OP at the moment. And, it's just not a great strategy. But it was the strategy that we had, right? Like, you can't blame someone for trying their best. But I think going forward, obviously, we need to try and figure out better ways. Personally, I'm a big fan of figuring out how to recapture all the value that TradFi is taking away and taking off the table and privatizing. If you look at the biggest, most profitable companies in crypto right now, the money is leaving, right? I mean, look at USDC, right? All that privatized kind of value taking off the table and going to TradFi and going to Circle shareholders, right? That's a, honestly, in my opinion, it's a very leak. It's a big leak, right? Because you don't see Circle, sponsoring Solidity, right? Like, they don't care. They have their people to pay, right? So I think there's a lot that kind of DeFi can do by banding together towards kind of supporting projects, supporting stablecoins that have a different vision and a more aligned one. And that's something that I really think, as an ecosystem, we should push a lot more. At the same time, I think the vision that, that we've been talking about with Octant is the right one. And also with Vinny, actually, about basically monetizing yield, right? I think yield is I think you can think of yield as kind of one of the best products that came out of crypto and DeFi, right? Because it's kind of this amazing primitive. It's just like, you have money, you get more, right? No bullshit. You know, it just kind of works. It's in the background. Everybody can access it, right? That's not the case in TradFi, right? That's a very DeFi thing, that yield is so easily composable and accessible. And I think yield is the way, right? So monetizing the yield of treasuries to fund public goods is the right way to do it. The problem is, who are those treasuries, right? And there we go back to, you know, Circle's not going to put their money to fund Solidity or anything else, right? So we need to make sure that the treasuries that grow are the ones that do this, right? And I think that's kind of as much of a values-based lobbying effort, and kind of even potentially boycott effort for people who don't support open source, to grow the right treasuries that will support things. Because otherwise, you know, we're just kind of all working to make you know, people in Wall Street rich, which was never the point, right? So yeah, I hope we're able to band together a bit more in the future on this.
Yeah, I think we're on the way, and maybe that's a good segue for you, James, to comment on that.
Yeah, I think it's really interesting to understand why Fran's point around, you know, token emissions just really doesn't bring a long-term pathway to success for different ecosystems. You know, a lot of ecosystems are just printing these tokens. You know, they have a big treasury that's mostly comprised of their token, but then you have this really weird situation where if you start to run grants solely from this token, if you give away too much, it really starts to affect your token price. If you don't give away enough, then you are not staying competitive within this broader landscape where builders are literally just going to where the most incentives are. So you're kind of stuck in this really weird phase where there really isn't this this playbook around how you can succeed in the long term, you know, given those constraints. We have seen some DAOs who have transitioned more to this like revenue model where they're using revenue, which DeFi can absolutely power, to create more sustainable pathways for ecosystem funding. Base was one of them. I know Arbitrum as well, you know, moving some of their capital into DeFi. So there are ecosystems that are starting to see that, you know, sustainability is really key to have success in the long run. And, you know, just to mirror that in what we've seen with Octant, again, just repeating what I said in the beginning of this whole presentation, you know, 30 minutes ago or so, we've been able to fund a lot of our strategic priorities, you know, giving back to Ethereum across a lot of different themes. And we haven't touched a dollar of the principal capital. Like, that has staying power, and DeFi powering that is the way to go. You know, I think there are hesitations by some still because, you know, negativity really sells at the end of the day. And DeFi has unfortunately had some folks that have taken advantage and caused, you know, crashes and you know, created maybe a little bit of paranoia. But for those who are really looking deep into what DeFi really offers, I think they're really starting to understand now that there is safe, low risk DeFi that can really bring sustainability towards whatever your strategic priorities are. So yeah, I'm really encouraged by that. It's literally what we're trying to sell at Octant is, you know, highlighting that DeFi can be the backbone for everything that you're trying to do. And I think it's really starting to catch on, and the ecosystem's waking up to it. So it's really encouraging to see.
Absolutely. Thank you, James. And Lea, I think your perspective is also going to be very interesting because you have been both on the, let's say, ecosystem funding side with Scroll, maybe like funding those projects, and now you are more of the recipients, let's say. Like, so I'm curious to hear your perspective as well. How have you seen the timeline of ecosystem funding, maybe from both sides?
Yeah, maybe just for a little bit of context, before joining Argot, I was part of the original core team at Scroll, and there I was building out the ecosystem and the BD team. And I mean, Nico's right, like there, you have several mechanisms that are available to you to fund the ecosystems. There's those that are not so long-term sustainable. I think we've all seen that farming initiatives are only have like a limited effect for the ecosystem, and it usually also does not necessarily like distribution of this is always a contentious topic. so you have this, but then you also have like grants available to you, but then you also have somewhat of a limited budget, even though you, for example, were able to raise large amounts, but you always have that point of view, okay, how is that feeding back into my ecosystem, or how is that ultimately benefiting my project? And I mean, this is fair enough. And if only a few or like a handful of players are doing this, then why should I change this? And I think, Fran, you mentioned earlier, I think you mentioned also the narrative shift that needs to happen, and a lot of players, or like a lot of people have already been doing that, including Octant, that we just have to have more players or more also successful companies be part of this funding stream or this funding mechanism. So if I choose to allocate a certain budget to public goods, for example, that is a decision, and that is funds that I cannot deploy to growth, for example, for my project. So that is just something to keep in mind. But if it becomes more of a norm, and if it is in a way that it doesn't necessarily sound like a big scary amount, but it can be distributed with time, and I'm not losing principal. So overall, I do think this is a very interesting avenue for us to take a look at. I don't necessarily think that there's one holy grail situation that will solve funding for everyone. I think also from our perspective at Argo, we will try to have sort of our hands in several cookie jars, just because we don't necessarily know yet what ultimately will work for us in the long run sustainably. A lot of it is also very dependent on market volatility. So we will have to have several approaches for this, but I think leveraging DeFi for this is a super interesting way for us to also tap into.
Yeah, thank you, Lea. And I think also the EF has been exploring this a little bit. We've seen the EF Treasury being used using DeFi now, and I'm curious to hear from you, Vinay. How are you looking at that from the funding coordination team, and also, yeah, just in general, how do you look at the timeline of ecosystem funding initiatives and in the past and now moving forward?
Yeah, it's a great question. I mean, in the past, we've sort of covered that a lot of the top of funnel value that was then eventually channeled into grants was either going to be a token generation event or some hybrid of that plus VC funding, all primarily to drive growth on a specific protocol. And that was necessary perhaps at that time because there was not necessarily that much economic activity happening. There wasn't value transfer that was originating and was being distributed outside of some of these token generation events. Now we're in a very different stage where the overall ecosystem has matured. There are mature projects. There are, of course, TradeFi. There are, of course, other parties starting to now use these neutral rails for their business value flows, business logic. And what I think is likely to happen and what is uniquely enabled by something like Ethereum is that you can take flows of actual capital and in real time redistribute them in a time-bound way. So you could do a fee switch on a vault for 2 months, just programmatically. You could skim off a specific amount of yield with the consent of the party that is receiving that yield and have that automatically be distributed into a splitter contract and sent to multiple projects. So there's something that is, I mean, what we're actually talking about here is the problem of open source funding. I mean, that is not a new problem. It's been a problem that has existed, and then we're talking prior to that, the tragedy of the commons. I mean, these are not new concepts that we're necessarily addressing, but we are now able to potentially tackle it in a unique way because there's a new technical capability, which is that real-time capital flows, real-time economic value that is generated in this moment can be redirected at will with software. And that's something that we're very, very excited about because we have seen I can't really speak for the EF and its treasury policy per se. Of course, they're now getting more active in terms of generating yield. But as more and more economic activity is being generated on chain, especially for critical dependencies that the Ethereum ecosystem relies on, we are actively advocating for teams to start thinking about public goods mechanisms and mechanism design. And that's why I'm personally very excited about Octant V2, the vaults. I don't know if the name has changed actually. So the fact that there is now infrastructure that is specifically designed to stake yield and redistribute value to projects that are essential in the ecosystem. More and more of these experiments are likely to start happening. And it's not to say that grants will go away. I think the grants system is quite well established. How the top of funnel that feeds into the grants might change. So it may be economic activity that's generated on Ethereum that then feeds that top of funnel rather than a token generation event. And then there's this very, very complicated question about once you programmatically start redistributing value to specific stakeholders, what's the governance mechanism around that? How do you decide that that's done fairly? So there's a number of experiments happening. This is probably a whole separate panel session if we dig into this, but there are a number of explorations happening both within the EF and outside of the EF that are trying to figure out fair ways to identify dependencies and distribute value and understand how to reward different projects. I'll just end with just one comment, which is we've been talking about how this is potentially really valuable within the Ethereum ecosystem. I had a conversation with the open source lead at the UN yesterday, who happened to be here in town. And I explained to him that actually open source funding could be solved with Ethereum simply because you're able to natively transfer value on chain to dependencies in a software stack and programmatically design it and have it set up with the right fair governance systems. And he was extremely excited by that because every single government around the world is trying to also move towards more open source software, less dependency on the 7 big companies in the US, and try and actually diversify and reduce risk around the technologies they rely on. So we can talk about it within our ecosystem, but I think the more we start exporting this idea outside to other spaces, the more success we'll actually have in real world adoption and use cases around this.
Yeah, I'd love to add to that as well. So, I heard Lea talking a little bit about, having to, get these one-off grants from different teams and, the challenges inherent within all of that. One of the things that I think is really important to consider is that, what Vinay just mentioned around funding open source software and maybe a lack of incentives to do so. There is already precedent for for-profit companies to heavily invest in open source software and understand that there are massive benefits out of it. So, the Linux Foundation is funded by Meta, funded by Google, funded by a lot of these very for-profit companies. And they understand that they're putting money in that they might not be able to directly point to the exact dollar amount that they get out, but they get a tremendous amount of value out of it. And so I think as we're starting to design for better systems, more sustainability, we can also really start to lean into telling a story around the impact that a lot of this open source infrastructure is actually providing, so that people understand I'm putting money into this system and I'm actually getting value out of it, because people know that they're getting value out of it, but right now there isn't stronger data to back up that story. And so people are really happy to free ride as long as they need to, while things are a little bit obfuscated or just not really clear in their opinion of why they need to contribute. So, I think we're approaching or tackling this from a couple of different fronts, but I'm really confident, over the coming years that we're really going to start to have both the mechanisms and the story and the data to really begin to feed into funding the things that we rely upon sustainably.
And can I open a small debate here?
Go for it, yeah, Fran. Please.
So,
we love debates.
So, I think Vinay mentioned, right, that governance is the most important. It is a very important thing, right? Where does the money go? Right now, when you start having Google being the main financer of your open source software, you don't get to choose that anymore, right? And James here is trying to get them on board, I'm sure, which would be great, right? We need more money, we need more people, but it becomes increasingly problematic when you have, clearly for-profit megacorps effectively being your lifeline, right? So I really, really hope that we can build the kind of, let's say, neutral distribution mechanisms, like capture resistant distribution mechanisms before that happens. I'm not the only one thinking about this. I think I've heard the people at Protocol Guild talk a lot about this. So, I know it's not a new idea, but I think it's worth remembering that, because we're not trying to become hostages to big corps, right? And I've heard disturbing rumors of the EF having some degree of this starting to happen already with some of the bigger, not fully kind of homegrown L2s. So, I hope it doesn't become too widespread. But yeah.
I'm just going to quash it. I don't know the context of the L2 conversation. I haven't heard it, but there may be some concern somewhere. There always is when you have such a large organization with so many touch points. But to your point about capture and capture resistance, that is absolutely something that is kind of front of mind, even as we think about some of these mechanism conversations. We are exploring initially entities that may be regulated, that may be financial institutions that exclusively rely on Ethereum. So if it's an Ethereum ETF, or it's an Ethereum DAT, or if it's something like that, there is potential for those parties to contribute, because there's a very clear fiduciary argument behind actually supporting the underlying infrastructure that the entire business model of this entity or this product relies on. Now, that is not going to be the full representation of traditional financial institutions. There are going to be so many different products and so many different entities that the likelihood of the centralization risk that you see with I don't even know what it's called now, the Magnificent Seven, or whatever the tech companies are now in the US, they are dominant, and there were specific unique characteristics around the evolution of the internet and technology that kind of led to 7 large companies. I'd be very surprised if the Ethereum ecosystem is even represented by 700 or 7,000 large companies. Over time, I imagine it to actually be quite a distributed set of entities, all generating value, because anyone can access this technology and anyone can build on it. Now, that's my optimistic take. Of course, that is to be seen. But I think just being aware of this risk is something that then informs even how we communicate to potential parties and who we reach out to in the first place around funding mechanisms this way.
Yeah, I think, go for it, Lea.
I mean, ultimately, that should be an incentive for crypto native projects to be part of, or just to have public goods funding as part of their overall budgeting in the first place. I think social norm, social pressure, ideally can counteract a little bit, but there will always be intents of capture that I think we have to be aware of.
Yeah, totally. And I think landing this back to the topic of DeFi, my take is that DeFi maybe levels the playing field a little bit. So maybe if a large corporation attempts to take over, there's the barrier is low enough so that multiple players can counter that and maybe avoid any capture. I mean, it's, again, maybe like Vinay, very optimistic, but at least we're providing a more neutral ground. But I believe also some risks come with. I mean, I think we all agree that DeFi can make ecosystem funding more sustainable, which I love to hear. But that also can come with some risks. So we're close to the end of the panel here, but we'd love to hear a take on the risks involved for using DeFi for ecosystem funding.
I mean, I can take a step. Yeah, I can take a short take on that. I mean, so with Octant running this grants program for the last couple of years, we definitely saw some pretty wild swings in how much funding we were giving out to people, running around every 90 days. Sometimes ETH was half the price or a third of the price than it was the previous epoch in just like a 90-day period, you know. And I think to Lea's point around, you know, trying to receive consistent funding for really critical infrastructure, that can be really, really hard when you're both getting one-off grants and the grants from established programs. The amount of funding that's being given out can, you know, vary drastically. So I think, you know, the way sometimes yield is generated, especially with ETH being so volatile. I mean, we saw that flash crash, which was like the biggest liquidation event just a couple of weeks ago. You know, that is in a way, you know, risky when the market can just fluctuate so quickly. So I know we're talking about diversification definitely into stablecoins at Octant. This is something that, you know, we believe that, you know, you can, I don't want to say hedge, but, you know, distribute your capital around a little bit to be a little bit safer, to not have so much risk within, you know, the market dynamics. But yeah, at the end of the day, you know, I think we're still early with crypto, and you're going to see volatility, and that volatility can definitely impact your grants program if you're funding with DeFi.
Yeah, and we hear this a lot from projects receiving funding, that it's hard for them to expect, so the risk sort of trickles down to them as well, and that's a risk for the entire industry. But maybe something like streaming can help manage expectations, let's say, on what is being received or not. So maybe, Fran, you want to take a...
Yeah, I mean, look, I'm obviously very, very I mean, yes, streaming can fix every problem, but the funding source is also kind of relevant. You know, Superfluid is a great tech to move money. It doesn't make money, right? You know, in the end, that's more important. As James said, you know, ETH can be very volatile. I mean, I think that's less of a concern, to be completely frank, because I think if we don't have a long-term vision of ETH appreciating, then we should probably just all go home. So in the end, you know, if you kind of structure everything to be long-term and safe long-term, right, so that you kind of have the funding available long-term because you don't leverage, you know, you can kind of, let's say, have some sort of long-term vision, then, you know, ETH going down, ETH going up shouldn't really affect your operations, because, you know, you can operate on stable coins without holding stable coins, right? Which is another kind of magical DeFi superpower, where, you know, we can use the dollar as a medium of exchange, but our store of value is ETH, right? Which is, again, something, you know, amazing that we can do with crypto. And I think a lot of people are kind of bashing the EF for not doing that, and instead selling their ETH to pay expenses in USDC, right? I think that's kind of a very big kind of missed opportunity so far, is to find more ways to avoid selling ETH, whatever happens, right? Even the yield, right? Even, like, imagine if we could avoid selling even the staking rewards and just increase the principal and just leverage it instead. Anyway, a lot of opportunities there. But yeah, I think streaming provides a great way for projects to have more predictable, sustainable, and composable income. And, you know, that's why we're working with Octant on this. So yeah, I hope we can do more.
Yeah, no, definitely looking forward to see these experiments come to play in the next few weeks or months. So yeah, I really appreciate you all for coming on here to the panel and giving your perspectives on this. You'll hear more from us in the practical side coming up. So thank you all.
Thank you.
Yes.